Hi, and welcome to the Stockscores Market Minutes for August 22nd, 2014. This week, my topic, buying the dips and selling the rips. It's a saying that many traders have heard about, but let's talk a little bit about a way to do that profitably. What we want to do is look for stocks that are in long-term upward trends, situations where there are rising bottoms over many months. We want to draw a line across those bottoms and really look to sell the stock when the market and price runs up and away from the trend line, and then buy the stock back when you get pullbacks to the trend line. It's a great strategy for a bull market like we have now. Here's an example of Microsoft. You can see that the trend line is defined by the lows in September of 2013 and then the lows in January and February of 2014. And in late March, early April, the stock showed some abnormal strength and caused the price to run up and away from the trend line. Those are the rips that we want to sell. Well, we then had a pullback, a dip to the trend line early in May. That turned out to be a good buy point as it bounced off of the trend line. Another one happened after the rip in July, the real run up and away from the trend line mid-July there, and then the pullback to start us off in August. So buy the weakness as long as that upward trend line isn't broken. Buy the weakness when it pulls back to the trend line. Well, here's another great example of a long-term trend. We've talked about this every week for as long as these videos seem to have been going. The S&P 500 is in a bull market trend, and this week we were able to close at a new high, which means that there is no falling top. That was the thing that I discussed last week as something to watch for as a cautionary sign. Well, we didn't get a falling top. We got a market that moved to new highs, and therefore the bull market remains intact. Same thing on the Canadian market. We rallied back nice and strong this week to close at a new closing high, not a new high, but a new closing high for the week, and that keeps us in the bull market upward sloping channel. The TSX Venture has rising bottoms very slightly over the last 6 months, but it is stable, and as soon as we can get some volume coming into this market, I do think that we could see some life again in the TSX Venture, which has been a really dead market through the summer. So I do think that we'll see a pickup here as we go into the fall. What we want to watch for is a break up and through that red horizontal line of resistance. Treasury bonds, U.S. Treasuries continue to move upward. Many experts, I guess, didn't think that that would happen, but now we're hearing big players in the U.S. bond market are calling for even more high prices in treasuries and lower interest rates as a result. The U.S. dollar had a real strong week because of problems in Europe primarily. Many of the European countries are slipping back into recession, and that makes the euro go down and the U.S. dollar go up. So we do see some continued strength in the U.S. dollar. Now, the strength in the U.S. dollar in the last, say, 2 months has been pretty good, and so this big up week could bring out some selling pressure next week, but I do think looking out longer term, the U.S. dollar does look like it wants to continue higher. Gold is in that pennant pattern. It had a weak week last week, and that's primarily because the U.S. dollar was so strong. It makes gold more expensive for anyone in a foreign country outside of the U.S. looking to buy gold. But it hasn't broken the upward trend line that I've drawn in green. It also hasn't broken through the red line of resistance. So it's really a neutral pattern in the short term there as gold grinds its way sideways. Oil slipped down again this week. We've seen now about 2 months of weakness in oil. It is nearing the upward trend line, and so any week now we're probably going to get a bounce. It looks to me like oil's a bit oversold and due for a bounce, so look for that to happen in the next week to 3 weeks. I expect that oil will make a bounce. The TSX, or pardon me, the VIX, the fear index, has fallen back to support where it's bounced off of a couple times in the past, and I think it will do so again. As we go into September, I do expect volume and volatility to increase in the market. And even if the market doesn't go down, the VIX can go up simply because volatility goes up, and the implied volatility in the options market will rise. So, bullish on stocks, both Canadian and U.S. Pretty strong week this week, so we could have a little bit of a quiet week next week as summer comes to a close. Gold neutral, Long term, it is at that long-term upward trend line, but short term, it's still stuck in that pennant pattern. Oil, I've put a neutral rating now in the short term because I do think oil is going to bounce in the next 1 to 3 weeks. Stocks have held their upward trend line and moved to new highs, keeping the bull market trend intact. Oil prices continue to fall, but are now near support where price should stabilize. Gold weakness does not bring a break of the trend. And as I said, we've got maybe another week of real boring summer markets, and then we should come out of the doldrums, look for volume and volatility to increase in the next few weeks. Well, that has been the Stockscores Market Minutes for August 22nd, 2014. Enjoy the final days of summer and have a great week in the market. Trade well.